Manager at EQONEX, and today we're going to be looking at how you take your first steps on the EQONEX exchange. I'm just going to share my screen with you and we can have a look at what I've set up for this presentation. When you first log into the exchange, you'll see a screen like this. It looks a little bit intimidating, but don't be worried. We're going to break down the things that you need to do to get started in the crypto world. Once you've got an account, the very first thing that you'll be interested to do is to deposit some funds. And there's a few ways that you can do this. I'm in my main account here, and you can see my name up in the top left-hand corner. If I go to the burger menu in the top right and go to account, we'll be able to find the options for depositing funds. If I go to wallets, then you can see we've got three options for depositing. You can either deposit fiat currency, so that's US dollars, or you can deposit crypto directly. The first thing we're going to look at is how you deposit fiat. Currently, we are only supporting US dollar deposits via bank transfers. You can come here and choose your bank account. I've already got my HSBC account set up, as you can see. And then we have a few different banking partners. This will be sent via the SWIFT network. So you need to have a dollar account that's able to send dollars through SWIFT if you want to use bank transfers at the moment. The other option, which we added recently, is credit cards. We actually accept credit or debit cards. There are some restrictions, but you can come here. You can choose how many dollars you want to deposit. You can make the payment in any currency, and it will be converted into US dollars by your credit card company for you. In the near future, we'll also be supporting deposits in other fiat currencies, but for the moment, once again, it's dollars only. The other option for deposits is crypto. So if you already hold some cryptocurrency, maybe in a crypto wallet or perhaps on another platform, you can send those over to EQONEX. That's a really straightforward way of sending funds over, and it's the way that I usually use. I would say. We accept a load of different cryptocurrencies. If I come down to this cryptocurrency drop down, you can see we accept Bitcoin, Bitcoin Cash, Ethereum, USDC, USDT, which is Tether, Polkadot, Polygon, Chainlink, GRT, XLM, EQO, Chiliz, and Ripple. We'll take all of those, but if you're going to send us crypto, please do have a look at our supported currencies on our website. So I've just opened this up in another tab here because it's really important that you send them on the right chain. If you send them on the wrong chain, there's a chance that the funds might not be retrievable. So Bitcoin just gets sent on the Bitcoin chain, and the same for Bitcoin Cash. ETH, Chiliz, EQO, GRT, Link, Matic, USDC, and USDT all get sent via the Ethereum chain. So that's ERC20, and then ETH, which is just the native token of the Ethereum chain. Polkadot gets sent on the Polkadot chain, Ripple on the Ripple chain, and XLM on the Stellar chain. I would make the point that Bitcoin and Ethereum can be quite expensive when the gas fees are high, if the chains are congested. So maybe have a think about sending Bitcoin Cash, Ripple, or Stellar, because those tend to be very, very cheap to transfer. So you can think about changing your coins to one of those three on the other end, sending them over to us using those chains, and then transferring them back once you get onto EQONEX, if you want to really minimize your transaction fees for those transfers. Oops. Now back to the exchange. So I go to trading to take me back to the main page. This, as I said, is my main account, Jack Gillett, but I've actually set up a sub account just for this demonstration. So if you click on the drop down, you can see all of the sub accounts that you've created so far. The one I've created for this demonstration is called EQOD, and you can see I've deposited $500 already into this account. So let's imagine you've created your account and you've credited $500. What are the next things that you want to do? Well, number one might be buying some cryptocurrency, of course, because that's one of the main things that people set up accounts on EQONEX to do. So what do you do if you want to buy some cryptocurrency? Well, buying the crypto, we call that spot because it's a spot transaction. You're changing spot dollars into spot crypto. And perhaps I should mention, by the way, if you deposit dollars, we will convert those automatically 1-to-1 into USDC. So that's a dollar stable coin. These are always 1-to-1, and you can withdraw them either as USDC crypto to another cryptocurrency platform or to your own wallet, or you can withdraw to your bank account as US dollars, and we will always honor that 1-to-1 ratio. So you can see this is USDC down here in my balances. That's just as good as dollars. I can withdraw either dollars or USDC when I come to withdrawing. But back to buying. So I've gone to spot, and again, I can choose any of these cryptocurrencies to buy. So we can see Bitcoin Cash is trading about $282. Bitcoin is at $38,000 at the moment. Chiliz is at $0.19, and so on. So let's say, choosing one at random, let's say I wanted to buy some Ripple. I click down on Ripple, and you can see that's trading at about 74 cents at the moment. So what does this mean? That when we're buying on an exchange, the really important thing we need to look at is the order book. You can see here that someone is offering a bid price of 74 cents 0.51, and someone's offering an ask price of 74.65 cents. So that means that if we had Ripple and we wanted to sell it, up to 6,676 Ripple, we could sell it. Well, okay, it's changed now. Up to 5,600 Ripple, we could. Oh, back to 6,000. We could sell it at this best bid price of now 74.45 cents. Likewise, if we want to buy, unfortunately, we can't buy quite at that lower price. We buy at the ask price instead, and you can see that that's about 1/10 of a cent higher per Ripple. So if I come down to the order form and I click on buy, and we'll start with a market order, and I'll just delete what's in there right now. If I wanted to buy, let's say 100 Ripple, I type in 100, and you can see that the order form has already made an educated guess that this is going to cost me about $74.71. And so it's done that by taking the best ask price on the book and multiplying it by the quantity that I put in here. So if I were to click buy, that would just buy me some Ripple. I'd see that my dollar balance would go down and my Ripple balance would go up. That just uses the best price available at the moment, but maybe I want to try something a bit more cost effective. Then I might consider a limit price instead of a market order. I'd go to limit order. What this means is that instead of choosing the best price on the book to buy, I can choose my own price. And this is actually what I'm going to do. So I don't want to pay $74.76 for that 100 Ripple. I only want to pay $73. So that means that for each Ripple, I'm only willing to pay 73 cents. So I put 73 in the limit price box. You can see now that the amount of dollars I'll have to pay, the approximation has changed to exactly $73, because that's, of course, 73 cents times 100. And I click buy. What happens? Well, I've just put a limit order into the order book. So this means you can see it sitting there. You can see the blue light, which represents that this is my order. That's going to sit there until someone is happy to sell me Ripple for 73 cents. So you can see that right now there are 5 orders above me in the book, and therefore rather a lot of Ripple. There's about 80,000 Ripple above me in the book, which people are willing to pay more than 73 cents for. So I'll need to wait until all of those orders have either been cancelled or been filled by somebody else before my order will get filled. But the advantage of this is that I'm guaranteed that this order will execute at 73 cents. So I'm getting it at a cheaper price than the best price at the front of the book, but I don't know when it'll get executed. So limit orders are good for people who are quite price sensitive, but aren't in a hurry to get their Ripple. If I needed it right now, I'd be best off going back to that market order, just putting in 100 and clicking buy and paying the higher price for that. Okay, so that's spot. Just for the moment, we can see this order that I put in the order book down in my open orders tab. So there it is, 1-to-1. I'm actually going to cancel it now because I want to show you guys something else that I think is really neat. And we'll see that when I click cancel, that blue light will disappear and the order will drop out of the book. Okay, sure enough, and back in the order book, that order is no longer there. Right, what's next? Well, we've looked so far at how you deposit crypto onto the platform. We've looked at how you buy spot, and remember that means buying the core cryptocurrencies, and selling it would be the same as well, by the way. If you send Bitcoin to the platform and you want to sell that into dollars, you would have used the sell instead of the buy, and you'd have chosen the Bitcoin market instead. And you'd have got about $38,500 for each of your Bitcoins. But what if we want to take a bigger exposure to cryptocurrency? What if we think that Bitcoin is going to go up a lot? Well, I've only got $500 in this account, so we can make a guess at how much Bitcoin I'd be able to buy for $500 by putting 500 in this bar here. And you can see it's only going to get me about 0.01 Bitcoin. So that means if Bitcoin goes up by $1,000, my profit would only be about $12 on that position. If Bitcoin goes up by $10,000, so we know the all-time high was about $70,000 a few months ago. So, I mean, if it goes up $10,000 or $20,000, I'd only make $100, $200 profit on that position, which maybe is less than I want to make if I'm really bullish on Bitcoin. So one thing I can consider, and again, this is where exchanges can come in really handy, is trading derivatives instead. So we discussed these a little bit in some of our previous AMAs. I can go to perpetuals instead of spot. And now I get this a BTC USDC F, where F stands for perpetual future. What this is it's a derivative contract that tracks the price of spot Bitcoin. But the important thing is that because it's a derivative, I don't need to put up all of the cash for the transaction when I make the trade. I can trade on leverage, and I've got a little window here. So I'm just going to change tabs. We can trade with leverage, and for EQONEX, that leverage can go up to 125 times if my position size is $10,000. Now, I've got $500 in that account, so if I were to trade with 100 times leverage, the position would be a little bit larger than $10,000. So, in fact, I'll get a blended rate of leverage somewhere between 125 and 75 times if I trade at maximum leverage. So let's have a look at the largest position I could take with my $500. We come down to this account leverage box. You can see I've got available margin of 500, and that shows me a buying power of $45,300, or equivalently a selling power of $45,300. And that's because one of the other neat things about derivatives is that as well as going long, I can also go short. So that means I can take exposure to Bitcoin prices going up or to Bitcoin prices going down. So if I think actually Bitcoin is priced too highly and the price is going to go down, maybe even to zero, I can also use derivatives, perpetual derivatives, to speculate on that downward movement with very large leverage. So if I come up to buy again, we said the buying power was 45,000. The Bitcoin price is only 38,000 right now. So even though I've only got $500 here, if I wanted, I could take exposure to one whole Bitcoin. I'd come here, press 1, and you can see that that's going to give me a notion of about $38,500 a position. And you can see my calculator is telling me that even after that, I'd still have a little bit more buying power in my account. So I can actually take an even larger position than one Bitcoin if I wanted. Now, if the price goes up by $1,000, the P&L from that position will be $1,000. Equally, if I go short and the price falls by $1,000, once again, P&L just $1,000. So using these contracts is a really great way to take a larger position than the amount of cash that you've got available to you in your account. I'm not actually going to buy it right now, but if you wanted to, that's what you could do. Likewise, just as we discussed before with spot, if I go to the market and buy, I'll be paying $38,487, $88, $89. If I come down and do a limit order instead, I've got my one Bitcoin. Maybe I only want to pay $38,500 for that. $38,300 for that position. I click buy, and once again we can see that my order has appeared down here on the order book. So this time there's many more orders. There's about 25 orders in front of me in the book. No one wants to sell to me for $38,300 at the moment because they could very happily sell for $38,488 to the person right at the top of the book. But if I leave that there for long enough, there's a very good chance that Bitcoin prices being quite volatile, they'll move up and down, and eventually my order will get filled. Once again, just for the moment, I'm going to cancel that order. But if I left it there, eventually I'd see that would fill. I'd still have all of my dollar balance this time because this is a derivative. So I don't pay anything up front except for the transaction fees. So for that one Bitcoin, the transaction fees would probably be about $20 or $30. I'd see my account fall by that, my dollar balance fall by that amount. And I'd see that I would take exposure to one Bitcoin with a notional value of $40,000, well, $38,490. After that, I'd be exposed to the full price increases of Bitcoin if it moves up. And also, I'd be exposed to the downside if it moves down, of course. You do need to watch out. Because I'm trading on leverage, I also run the risk of liquidation. So as soon as the losses on the account start to get close to that $500 of margin that I've put up, if I don't manage my position down, I could get it all closed out by the liquidation engine. Once you have a position, you'll see an estimated liquidation price will appear in your order leverage info, and you'll also see a margin liquidation trigger. That's the really important number. Once your account margin falls to that amount, you'll get liquidated. So if you do trade with leverage, you have to be really careful to manage your liquidation risk, because otherwise everything could get closed out in a hurry. On the other hand, though, it's a great way to take a large position with a relatively small account size. The one other thing I wanted to mention as well, by the way, was withdrawals. So we've discussed deposits already. What about when I've made my trade, I've taken my leverage on the Bitcoin, I've made $1,000 of USDC, and now I want to withdraw it somewhere else? Well, the first thing is I'm in a sub account now. For withdrawals and deposits, you have to go back to the main account. So I've done that. I've gone back to my main account. I come over here and I go account again. Withdrawals are in just the same place that deposits are. So that's wallets. I come down here, you see deposits and withdrawals. So I go to withdraw. And once again, there's a couple of different choices. You can you can withdraw either cryptos or you can withdraw cash. So you'll see many different cryptos are listed in here. and there's also US dollar. So if I click there, it will once again give me my bank account options. So I can come here to withdraw to my HSBC bank account. For dollar withdrawals, there's a $40 withdrawal fee. That's charged by our banking partners, I'm afraid. There's no way we can get around that. But for crypto deposits, they can be much, much cheaper. So, for example, if I go to Bitcoin here, I've got another tab open, which I'll just jump to now. You can find all of our withdrawal fees on the fee schedule. These are denominated in cryptocurrency, so it's a little bit hard to get your head around when you first look at it. But if you look at the BTC withdrawal fees, for example, 0.0004 Bitcoin, well, when Bitcoin's at 40,000, that's about $16. So that's quite expensive. But you'll remember, for example, we saw Bitcoin Cash was only about $300. So if this is $300, this turns out to be about 6 cents, which is very, very much more affordable. So once again, maybe you'll consider when you're doing your withdrawals, if you can do it on one of those cheaper chains, you'll save yourself a lot in withdrawal fees. The other thing to mention is we have an exchange token called EQO. You can see here, if you have 500 EQO in your available balance, all withdrawal fee crypto are marked down to 0. So it's completely free once you have 500 EQO in your account to withdraw Bitcoin or to withdraw Ethereum or to withdraw any of those other tokens on any of the chains. So that's really worth considering if you're going to be an active client and do a lot of deposits and withdrawals. Go to so EQO is a spot currency once again. So just to show how we would do that, we'd go back to the trading page. We'd go to spot. We'd go down to, We'd go down to EQO. And you can see that right now it's about 20 cents. So if you wanted 500 of those, it would only cost you a little bit more than $100 to buy those. And if you're doing a few withdrawals, you'd probably find that pays for itself in very short order. So it's really worth having a look at taking some of those exchange tokens. We also do periodic promotions for people holding lots of these exchange tokens. And you also get fee discounts on your trading fees if you hold a large number of them. So really worth having a look at if you're going to be an active customer. That's everything for my presentation today. We're going to move over to a Q&A session now. So if you've got questions, please send them in. The other thing to mention is that there's a couple of links underneath this video in the description section. One of them is for signing up. So if you haven't signed up yet, click on that link, follow through and create yourself an account, and then you can do all of the things that we've discussed today. And the other thing is watch out for our EQONEX emails, which we send out weekly. We've got crypto analysis, trading strategies and trading ideas, and a little bit of research. Really good reading if you're trying to think of some interesting trading strategies to do either with spot or with perpetuals on EQONEX. So do have a look out for those. They're great reading. As I say, they come out weekly. That's it for the presentation. So now let's go over to questions and answers. Apologies, I just hit mute there. We've got a couple of questions that came in from Satoshi Kakashi. First of all, what does the fee schedule look like with credit card deposits? So our standard fee for credit card deposits is 3.2%, but we actually have a promotion until the end of April where we're not charging you anything at all. Be a little bit careful. Your bank might charge you a fee if you're depositing in a non-dollar currency for the FX conversion, but there's no fee at all on our side. And I'm aware that several of the people who I know who have made credit card deposits haven't been charged anything. So really good thing to do before the end of April. Fee-free credit card deposits. Any plans to increase the order book depth? So again, another really good question. We just had a look at the Ripple order book, and we saw that there were about 5 orders deep on either side, which was 80,000 Ripple in total. So the first thing is 80,000 Ripple is already quite a lot. So the book is quite deep already. Excuse me. The other thing to say is if you actually buy some of that, you'll find that the market makers will generally post more liquidity almost straight away. So actually there's some interesting trading cost analysis that you can do. If you wanted to buy 80,000 Ripple, you could either buy everything all in one go, or you could just take the top order from the order book. That's about 6,000 or 7,000 at the moment, which is the best price available. Before long, the market maker will probably post another 6,000 or 7,000, so you can buy that again, and then you can build up your 80,000 Ripple one clip at a time. You'll excuse me. You'll often find that this is very, very much more cost effective than just placing a very big market order. We call that walking through the book when you put a big market order on, and you'll end up buying at the best price, and then the second best price, and then the third best price, and so on, so that the average price maybe isn't as good as you could do by making smaller transactions over a slightly longer period of time. Marco, very happy with delta neutral, but when will more perpetual futures be added? Can we add respective perpetual futures of the cryptocurrencies listed at the date? Yeah, really good question. Thanks. More perpetual futures is on our to-do list. So we have a few other spot currencies listed at the moment that we don't have perpetual futures on. We are looking to roll out perpetual futures on those in the fairly near future, but it's not right at the top of our list. So they are coming, but it won't be in the next couple of months. If you would like to see them, we always love to get this feedback. It really helps us to steer in the direction that our customers want to be going. So we'd love to hear more about why you're interested in perpetual futures, which ones you'd like to see, and how you trade them. But it's certainly something that is on our radar. Jan, is there a maximum for credit card deposits? Excuse me. Yeah, there is. The maximum deposit for us is $5,000. But we've also seen that some credit card companies have their own limits, which are lower than $5,000. So it does depend on the card. I have one friend who was unable to deposit $5,000, but was able to deposit $1,500. So it depends a little bit on the card. But from our end, the limit is $5,000 per transaction. Tammy, is there a good way to manage leverage risk? Do we often position-based leverage? Yeah, we do, but not in the same way that some other exchanges do. At EQONEX, you can create multiple sub-accounts, and those sub-accounts are completely isolated from one another. So that if you have a leveraged position in one sub-account, even if it gets liquidated, you can only lose the assets that you have sitting in that sub-account with it. You can never lose assets that are sat in an isolated sub-account. So if you're looking to take a large leveraged position and you don't want it to impact all of your other assets, do it in a sub-account. Create a new sub-account and put all of the trades in there that you want to protect from any liquidation risk, that you want to isolate from all of your other assets from a liquidation risk perspective, and that will do the job. Marco again, it would also be interesting to have more types of derivatives and to be able to use the EQO token as collateral. Yeah, really good point. So we've just listed dated futures in the last couple of months, and we have a few more of those coming fairly soon. So we want to list dated futures on Ethereum and also longer dated futures on both Ethereum and Bitcoin. So that will probably be the next thing that you'll see in terms of more derivatives. In terms of cross collateral, you've raised a really good point. One of the good things about EQONEX is that you don't just have to margin your positions in dollars. You can actually margin them in either Bitcoin or Ethereum at the moment as well. So if you've got some Bitcoin and you don't want to sell it, you can still trade perpetuals using that Bitcoin as collateral. Putting EQO onto our list of currencies that we accept as cross collateral is also on the radar for us. But given the thin liquidity for EQO at the moment, it's something that we haven't prioritized. The thing that we're worried about is if people traded a big leveraged position using EQO as collateral, and we had to liquidate that, we would potentially have to sell a lot of EQO all in one go. That's not very good for the price of EQO and all of the other EQO holders that there are, but it's also potentially dangerous because, as I've said, that's going to go straight through the book, hitting multiple different prices, and it will probably end up receiving a much lower number than the number that you might anticipate from the top of book price. So there may not be enough to cover the liquidation, which puts platform stability at risk, and it also would really hammer the EQO price, which is something that we're quite cautious of doing at the moment. So we're looking very closely at how we could do that for EQO. Maybe we need to build a new mechanism or something, and we'll have more information about that in future, but it's not something right on the top of our list. Christian, what causes the basis to flip between positive and negative when using perpetual products? Interesting one. Basis is determined by the difference in price between the spot price and the perpetual price. And this is the mechanism that we use to keep the perpetuals in line with spot. So if you've got spot and the perpetual price is going up and up and up and up, far above spot price, that means that if you're holding that long perpetual, you're going to have to pay the short holders of that perpetual to keep your position open. So the idea is that encourages you to sell off your perp, which will tend to push the perp price back down towards spot. Of course, the opposite can occur where the perp is below spot. And in that case, the people who are long will receive basis payments from the people who are short, which again will encourage people to take long positions and push the put price back towards spot. So basis is a really clever mechanism by which we can trade this derivative with very high leverage that's not actually tied to spot or deliverable into spot, but because of this basis mechanism, it stays very close to spot over time, and it will always tend to come back towards spot. So a really nice mechanism, and there's some interesting strategies that you can build using spot and perpetuals and maybe dated futures as well to take advantage of these basis payments too. That's probably the topic for another AMA. If there are no more questions, we can probably wrap up there, but please do feel free to send emails or get in touch with us on our Telegram. We always love to get feedback. We'd love to hear more, and we'd love to have suggestions for future AMA topics as well. Thanks very much.